Over to Dr. Harish Gopal.
Dr. Harish.
Thank you, sir. Thank you, sir. As always said, everybody in the group is asking where to invest, how to invest, what to do. Tomorrow, what will happen? Will the market fall? Will the market go up? So, irrespective of that, we'll see where to invest. Is with the for that answer, Dr. Satish is going to answer that answer. He has developed a technique where we can find out where is the value in this market, and for getting extraordinary profits, how to go about finding these gems. Over to Dr. Satish.
Thank you so much, sir. Thank you so very much, my mentor and guru, Ajay sir. Thank you so very much, Harish sir and Pawan sir, my fantastic colleagues, and all along my journey of financial learning. I'm thankful to entire PATS Academy for giving me the opportunity. I really feel overwhelmingly happy that the right opportunity has been provided to me at the right point of time in the market. Today we'll see how and why is it the right opportunity to invest. I also have with me my little son, Rian Krishna. Rian, in this May, your birthday is coming. What will you do? Will you spend or will you invest?
I will invest the money.
Oh my God. So my Rian wants to invest, not spend. Enduk Rian if invest us now?
Because if we invest in May, we will get high profit.
Very good, very good. So even my son understands this point. Thank you, Rian. Thank you. So my son has understood the concept that this is the lowest point in the market to invest. Let's dive into why is it the best opportunity to invest in the market. Before going ahead, let me break this 10-decade cycle into 3 parts: golden phase, silver phase, and bronze phase. What happens in golden phase? Now I will just start sharing my screen. For people, always remember one simple golden rule. Buy in summers before Ajay sir's birthday and sell in winters before Diwali. And this happens 3 times in 10 decades, in 10 years in a decade. This is that bronze phase, gold phase, silver phase, bronze phase. Okay. So we will just go through what exactly is this phases. Okay. My screen visible to everybody?
Yes, sir.
Oh, fantastic. Thanks so much. The black screen was there. How can I? Sir, paine vasta kada audio, video tools vasta kada. How can we minimize that thing, sir? How can we hide that thing? Anyway, so everybody, welcome to the world of golden investments in markets. You can see every 10 years, market moves in 3 cycles: golden phase, silver phase, and bronze phase. What is golden phase? Golden phase is something, I would like to share a small thing with you. There's this video on my YouTube channel. Kindly go through it. But for now, I'll just give you a snapshot of this.
That's great.
So this is our golden phase. Every 10 years, you will get an opportunity when the market will crash 50% and will rise 100% in the subsequent year. As you can see, in 2008, the market crashed around 50%. and shot back up 100% in less than 1 year. In this decade, 2020 was the opportunity where the market fell by 'So our golden phase was over in 2020. Then comes our silver phase. In silver phase, what happens is market drops by 30% and shoots by 50%, 50% per year. In 2 years, you get 100%. So in 2012 to 2015, if you watch carefully, market crashed 30% and shot back up to 100% in 2 years. In this decade, the market crashed in 2022, a silver drop, 30% drop and 50% rise in 1 year. Coming to the bronze phase, that's where we are right now positioned in. Market drops 20% and will give you 30% per year for next 3 years. Harish sir, just to confirm again, are you able to listen to my voice and see the screen?
Yes, sir.
Fantastic. So this is 2025, the starting of bronze phase. And we are expecting a return of 30% per year for next 3 years. What will happen in 3 years? The market will run at 30% per year for next 3 years. It will give a sharp rally. And then the cycle will repeat. Again, the bronze phase will come. Again, the golden phase will come. Again, market will crash 50% and you'll make 100% profit out of it. So as you can understand, we have 3 phases in the market. First phase is golden phase, silver phase, bronze phase. Golden phase gives you 100% per year. Silver phase gives you 50% per year. And bronze phase gives 30% per year. The funny thing with this 10-year logic is remaining 7 years, it gives hardly 6 to 8% per year. People who will begin this journey after this July, they will be seeing some 10% or 8% per year. Why I'm saying this? Because market has to give an average of 15% or 14% in 10 years. It gives 100%, 50%, 30%. And remaining 7 years, it gives 6 to 8%. All this put together, average runs in a market in 10 years is 14%. The point I'm trying to impress upon you today is invest before this April or May. After that, whatever amount you start investing, wherever you start investing, you will be looking at a return of 6 to 8% per year. The average will be 14% in 10 years. But for this decade, this is the lowest opportunity to invest. What to do in this opportunity is the next question. So let's look at the same thing in a snapshot. You can see it here. 29 market gave 100% profits. 2020 market gave 100% profits. 2012 market gave 50% profits. 2022 market gave 50% profits. 2016 2025 30%. I am telling you, my dear colleagues and friends, get ready for an exciting bronze bull phase now. After this April is over or May is over, you will see a strong bull getting back on track. From where?
I see once. Enough of that from Brianparang to get to the boundary.
Harish sir, I think somebody's mic is on. Can we mute all?
not much loss. It's also on the slower side.
Sir, you have to mute everybody. Only Ajay sir and Pawan sir can mute everybody.
Okay. I will just give a call to Pawan sir once again and mute everybody. Monday?
Sir, I have muted all, sir. You can go ahead, sir. Go ahead. Satish, you have to unmute yourself.
Okay. Thank you so much, sir. Thank you so very much for your help. So we are now in bronze phase, heading forward to a good bull cycle. Remember, my dear friends, after a bronze phase, you will get back our golden phase. If my prediction goes well, what we are expecting is for 20 until 2028, you will get 100% returns. So my prediction will be close to like this. You invest 100 rupees here, it will become 200 by 2025, 2028. If I'm thinking it right, 2029 to 2030 will be our crash phase, in which if this 200 rupees is invested well, it will make us 400 rupees by 2031. So remember, you have to invest here, you have to exit here and reinvest 200 in 2030. Invest 100, exit 200, and reinvest 2000 in the crash market, the golden market. And I'm telling you, my dear friends, by 2031 or 2030, if things go well, you'll be looking at 400 rupees out of 100 rupees in less than 4 to 5 years. And that's a staggering result, a staggering profit. And this only will become true if you invest in this summers. Because after this, there'll be a bull rally. For my colleagues' sake, I would show you how this thing went on in the last So watch carefully. This was our golden phase. In 1 year, we got 100% returns from here. Okay. And this was our silver phase. 2022. And this is our bronze phase. 2025. As people can see it very clearly in this graph. This was our golden phase, the silver phase, and this is our bronze phase. And the same cycle continues. Golden phase, silver phase, and bronze phase. Here again, a golden phase, a silver phase, and a bronze phase before the rise. So this cycle repeats every 10 years, dear friends, in the past 140 years, if you look carefully in the market. So 1901, the market started. 1909, the golden phase. 1919, the First World War, golden phase. 1929, the Great Depression of the world. Again, a golden phase. 1939, Second World War. After that, 1962. Then 1971. Then 1981. Then 1991. Then 2001. Then 2000, not 10 but 9. And then 2020. You can see the cycle has repeated itself perfectly in sync. Any 10-year span you take, 10 or 12 approximately here and there. You take, and you will see the same thing repeating again and again and again and again. That is, market gives you a golden opportunity every 10 years. Similarly, market gives you a bronze opportunity every 10 years once only. And this, my dear friends, is the last best opportunity for anybody to invest in the capital market. Why I'm telling you this again and again is, after the bronze phase is gone, if you invest after Ajay sir's birthday, which comes possibly in July 4th, if I'm not mistaken, somewhere in July, you will only have iron rod phase, 6%, 8%, 10%. You may go back into history and check it out. My derivation of this formula comes from the past 140 years of equity market or stock market. So, my dear friends, we are at the best time of this decade. That is the bronze phase. The next question is, Satish, where should I invest in this market? Or the more important question is, what everybody wants to know right now. If I'm not mistaken, everybody wants to know, is the worst over? My dear friends, can you please help me put up some chatbot notes and tell me, what do you think? Is the worst still looming over or things are settling down? I'll give 3 options. First option, I'm saying worst is over, start investing aggressively. Second is start deploying phase by phase, phase by phase, phase by phase. And third thing is wait for the 90 days to get over, let July pass, let the clouds clear up, and then start investing. One is do it now, do it half the way, and do it completely after July. Can somebody put into chat box, what are your perceptions? So second, wait for something, phase by phase, phase by phase, phase by phase. Very good, very good. Anybody else? Anybody else? I would like to recall 2022 Jan, 2023 Jan, 22 June, and 24 June. My very good friend Pavan sir and my very good friend Harish sir, we realized this logic of investing. Okay, Fatehpur sir, Manoj sir, phase by phase, phase by phase. Lingaraj Elogate, Suresh Mangalnath, very good sir. So many people have given their opinions. I would like to go to answers now. What our prediction says is, the worst is over. Start investing now. This is for aggressive people. Those who are passive, they can do it phase by phase. But remember, this phase should not be more than July. You can make your investments, break your investments into 3 blocks: April block, May block, June block. Do not cross July. And third thing is, who are very conservative, Satish, no risk, let the news get sorted out, I'll invest after that. Then wait and watch the movie. It's an exciting movie to watch. All the predictions, all the ups and downs will be fantastic thing, opportunity. These people who will wait and watch, if I'm thinking it right, they will end up somewhere around 7% returns. Phase by phase, you end up around 15 to 20% returns. And people who will aggressively invest now, they may get 30% returns. These are all predictions. I'm not saying this will happen, but most likely, yes, this will happen. The question is, what is the risk from here? If you start investing everything now, you still have a 10% risk that things may go down from here also. In case of the worst thing happening, China actually going to trade war and all these things, market cannot come down more than 10%. Tell me why. Why do you think market cannot come down more than 10% from here? Because 10% from here will be equal to silver phase. My dear friends, in the past 140 years, you never got 2 30% drops in the same decade. You got only one drop of 50%, 30%, 20%. And we are right now at that bronze phase. If from here you drop 10% more, it will be equal to one more silver phase. And in the past 120 years, there has been no double silver phases. So I am believing the worst is over, but in the worst case, The probability of worst phase is 15% probability. I'll write the probabilities as well. Slightly a bit technical, but probability of risk is 15%. Probability of profits is 85%. That is, if you start investing here, you have 85% chances of probability, okay, of making profits. The worst you can see is a 10% drop from here, but the best you can see is a 30% rise from here. This is the most likely probability. For people who want to invest phase by phase, their risk comes down significantly to less than 5%. But returns will be lesser, 15-20%. And people who will keep watching until this November, October, just to tell you, my dear friends, the risk will be higher. Surprisingly, it will be higher because you will enter the expensive market. After July, you will enter a very expensive market. And the fall from there is very, very risky. So if you want to go very conservative in this thing, wait and watch segment, then start a SIP here. Random SIP, no big logic, random flexi cap or large cap or whatever. You can start here and sit, wait and watch. 7 to 10% returns you will definitely see in this market. I have got 3 of my very good colleagues who saw this happening. Last time in the pediatric billionaire workshop, I mentioned that markets are very expensive. Book your profits, lock your profits, and don't enter them. This was in Jan 2025. And then Shankaran, Naren mentioned the same thing, that book your profits. In June 2024, our favorite Pavan sir has witnessed, because we entered in June 2024, our losses currently in the market are less than 1% when the market crashed by 25%, 20%. And in Jan 2023, our Harish sir will see the benefits of harvesting the maximum profit. See, the logic of investments here is very simple. Minimize the risks and maximize returns. And how do we do that? Very simple. Minimize the risk when you're entering into the expensive market. At a low time you enter the market. This was minimizing the risk and then maximizing the profits. We entered into a very low market in Mafang in 2023, and our profits today, even today, are more than 100% in 2 years. And our losses even today are less than 2% when the market has crashed significantly by 25%. So the logic here is, in this right time, take a leap of faith, invest your money, and believe me for some time that the worst is over. Take a leap and jump on all your money. So let us say you agreed to a fact that, okay, Satish has said, well, and we have agreed to invest all the money. How do we invest? Listen to this distribution very carefully. If you are going to invest, if you have 10 rupees every year you are investing SIP, so that makes it 10 into 3, nearly 300 SIPs in next 3 years. Remember, my dear friends, the planning should not be for 1 year, 2 years, it should be for 3 years. This is your 3 years. Okay, so exactly speaking, 360. Okay, 360 SIPs. Our plan is very unique and very simple. You invest 150 rupees now and invest remaining 150 rupees across 3 years at the rate of 3% per month SIP. Slightly confusing. Okay. So let's make it more simple. Let's assume that in 3 years, you're going to invest 100 rupees. 30 rupees per year, and you're going to invest 100 rupees in 3 years. So now invest 50 rupees and start a 3 rupee SIP. What will happen? This 3 rupees sorry for correction. So let's assume that we have a total of 200 rupees to invest in 3 years. So now invest 50% out of it, and 3% of that 100 rupees is that 3 rupees per month. You do SIP into 36 months. In exact terms, 3 rupees. So that will make it again 100 rupees in SIP, 100 rupees in lump sum, and that will be 200 rupees you have invested by the next 3 years. If I'm thinking it right, my dear friends, by 2029, when the market will give you a golden opportunity, you will be sitting at 400 rupees profit. The 200 invested will become 400. And by 2031, if I'm thinking it right, you'll be looking at 800 rupees out of 200 investment. These are all rough numbers. But what I want you to understand is, at this point of time, define your 3 years investment potential. So define your 3 years investment potential. 50% invest now, and remaining start a 3% SIP into the market. This is the proposed plan of investing. The question now is, Satish, I don't want to put lump sum. I don't have money. I just want to do SIP only. So what's the difference? Difference is very simple. If you do only SIP from here, in next 4 or 5 years, your net returns cannot cross 10%. We are in the bronze phase. Bronze phase, the best returns in the best funds are 10%. Don't blame your advisor, poor guy, if you get a low returns in this phase. It won't be 30%, 60% like in the golden phase. Many people have seen that. Mere assets, small caps give 30, 60%, 50% returns. It won't happen this phase. Bronze phase, the best you will get is 10. In the best case, you will get 20%. Nothing more than that. If you do only lump sum plus SIP, you are looking at a potential 30% CAGR for next 3 to 4 years. And remember, this will only hold true if you capitalize only 2 opportunities, bronze phase plus the golden phase. If you only invest till 2028, the fruits always look like 25-30%. It won't be costing 30%. But if you capitalize bronze plus golden phase, you will be looking at close to 4x returns in 4 to 5 years. This is my prediction. Now, what are the variables of this prediction? So, Satish, tell me, what are the variables? What may change your outcome? Very simple. It has never happened that market has crashed twice in 10 years. But in case market crashes, then you'll be left with 3x returns. Not 4x or 5x, it will be 3x returns. Second thing is, always remember, because you have entered the market in mutual funds or stocks, Your returns will depend on Nifty 50 returns. Never think it an isolated return. That whatever happens in the market, I will get 30%, 40% returns. It never happens. If market gives you 10%, you may get 20% in a lump sum SIP strategy. What we call as value-based investment plan, or we also call it smart SIP. Okay. Whereas if Nifty 50 gives you 10%, you end up in 30%. If Nifty 50 gives you 25%, you end up in 40%. If Nifty 50 gives you 6% or 7%, with this trade wars and everything going on, you will get hardly 15%. So whatever happens with my dear friends in the market is subject to, relative to Nifty 50 and market. Okay. So now we have discussed two most important questions. First question is the worst over? What should be our action plan? How much to put into what kind of investment? Other question people have constantly asked me is, okay, so you have told me how much to invest for how long? One second, so sorry. I have told you answer about how much to invest for how long. Now the question is, where to invest? Everybody wants to know where to invest, what sectors to invest, what stocks to invest. Okay. So before going for that, can somebody tell me? I'll give you 4 or 5 options. Auto, Finserv, banks, FMCG, consumption, IT, oil and gas, energy, large cap, mid cap, small cap, micro cap also, IPO. Similarly, factor-based investing. There is something called factor-based investing. Factor-based investing. This is sector-based investing. This is market cap-based investing. So, can somebody give me an idea? Alpha, momentum, value, quality, and there are theme-based investing. Theme-based are defense, PSU banks, digital India, EV and new age automotives, housing and real estate. Out of this, I actually want to ask my dear friends, where are you planning to invest? Can you all please tell me your choice of things? Finserv, best factor based also. Auto, combination, very good. Anybody else? Okay, somebody is asking me, can you please name few stocks instead of sector based investing? I'm very sorry, sir. You may call me or ping me in the group or to my personal number. I'll tell you some specific stocks I'm investing in. But I cannot name any specific fund or a specific stock to invest into at this point of time, because it is forbidden as per the laws to promote or specifically speak about 1 or 2 stocks or funds. Okay. So somebody has mentioned Fatehpur sir, defense, energy, PSU banks, banking, combination, factors, combination. Okay. So today we will decode this mystery. I will show you what stocks to pick up, where to pick up, and also I'll show you. But have a look at this first. This will be one of the fantastic sites you will ever visit this year. News-based investing time. Okay, one thing I would discuss before, it's already 4:40. I'll quickly go to our investing strategy and site. I'll come to that. What's happening with the Trump and all that. I have a very good explanation for this. But for now, let me focus on what to invest. Okay. I'm very happy that somebody has mentioned financial services. One of the best sectors, still waiting like a crouching tiger and hidden dragon to jump on to rise. Okay. Congrats, Amar sir. Banks you have mentioned, FMCG you have mentioned. Dheeraj sir, congrats. You have mentioned banking. Okay. So, Atmanirbhar Bharat. Yeah. These are very narrow domains to talk about. But yeah, let's look at our heat map. What does heat map say at this point of time? Currently, private banks are highly undervalued. Currently, tech is highly undervalued. Currently, FinServ, excluding banks, is also undervalued. Among the sectors, please don't invest in auto sector. It's very expensive. But in case you want to invest into auto sector, use momentum strategy. That is, when the momentum is more and more and more, keep investing into it. The moment momentum comes down, come out of it. All the green things you should go by value investing. All the red things you should go by momentum investing. CPSC, Central Public Sector, Maharatnas. There it is very, very, very expensive. I will show you what may happen with this if you invest in CPSC. The expensive zones, I will show you what happens. And I will show you what may happen if you invest in green zones. So consumer durables is one more green sector you are planning to invest into. Nifty Realty is very expensive. My dear friends, please believe me that real estate is expensive in the stock market also and in the real market also. If people are thinking that this is the right time to buy real estate and not stocks, they are slightly mistaken. Real estate is very expensive from all the valuations perspective. Okay, now coming to the projection for these things. Watch carefully, my friends. If you invest in CPSC at this point of time, you can end up with 50% losses in your principal. And if you are lucky enough, you may get a profit of 100% or 300% in 3 years. Remember, my dear friends, when something becomes very, very expensive, the potential of a loss becomes very high. So this is the worst case, this is the best case. Most optimal case is just 1% or 2% profits from here for any investor. It's a very high risky zone right at this point of time. I won't recommend doing that. Nifty Defense, you may guess worst is 7% losses, good profits, but looking for 15 to 20% profits every year. And I'm going to say every year, these are total annual returns. In next 3 years, PSU banks, you may look at a nearly close to 100% losses from here. Such a risky segment at this point of time. PSU bank's best time to invest was October 2020. I will show you where we invested in this segment and we made remarkable profits in that. At this point of time, if you invest, you're going to look at 1% profits or minus 1% profits in bank for next 3 years. Most likely, this is the most likely possibility, dear friends. This is the most, up is the most likely possibility. This is the worst you can see in 3 years, highest you can see in 3 years. So as you can see, the most likely possibilities are very, very, very low in these expensive segments. So if you want to invest in them, invest on momentum basis. Enter, the momentum is down, quickly exit. Whereas if you are looking for, okay, Satish, I want to buy sleep for 3 years, then go for value-based investing. You can see here, private banks are going to give you somewhere close to 28% returns every year, most likely possibility. 85% possibility you'll get this. IT industry is going to give you 45% returns. FinServ 30% returns. Why these numbers are around 30%? You have you noticed? Because we are in bronze phase, my dear friends. We're in bronze phase. Any undervalued sector at this point of time will give you close to 30% returns. Remember, undervalue only, not expensive valuation. There's a factor called quality. Have you heard of quality? So Nifty Mid Cap 150 quality stocks. This funds, there are funds which are investing in mid cap quality factor, and that's undervalued right now. This is Nifty small cap 250, momentum and quality. There are funds and stocks investing in this thing. Then there are plain quality based investing. Nifty small cap quality, Nifty mid cap quality. My dear friends, although mid cap and small cap are slightly expensive right now, as I already mentioned during my pediatric billionaire workshop, don't think that the whole mid cap is expensive. Just remember that some parts of mid caps are still undervalued. For example, mid and small cap IT sector is undervalued. Similarly, mid and small cap finance is undervalued. Mid and small cap momentums are undervalued. Mid and small cap qualities are undervalued. So these niche domains in mid and small cap sector with their specific subdomains in it, quality, momentum and alpha. Do not touch value. Value is highly expensive. If you're investing in a factor, any factorial fund which mentions value, stay away from it. It's not undervalued right now. But any fund that mentions momentum, for example, Nifty 200 momentum 30, Nifty 200 alpha 30, these are undervalued right now. Alpha lower 30, these factors are undervalued right now. Similarly, there is a sector called ESG theme. What's ESG theme? There are some great companies which don't run after profits. They run after ESG, environmental, social governance. They try to make it profitable for the clients, for the community, for the society, and for the employees. Our big companies come in this category. So ESG sectors are highly undervalued right now. ESG exclusionary. These are shortcuts. The detailed list is there on the other pages where I mentioned detailed list of things. What do these shortcuts mean? ESG exclusionary. These ESG companies do not invest in tobacco and alcohol-based businesses. So that's also, if you come across a fund which says Nifty 100 ESG exclusionary, then go with that fund. If it says 100 ESG, go with that fund. If it says housing theme, go with that fund. And Nifty service sector. So exports and service sector, my dear friends, I have been telling for the past 3 months, is highly undervalued. With this Trump's nightmare, it has become significantly undervalued. So kindly invest in Nifty exports and service sector. There are 1 or 2 funds. My dear friends, just remember the broad-based sectors, flexi cap, multi-cap, and large cap, mid cap are all expensive now. The potential returns here are 6%, 8%, 10%, or possibly 15%. But remaining value is left in these factor-based, these theme-based, and these sector-based investing. Don't go out investing every factor. If you want to invest, please invest into alpha, momentum, quality at this point of time. Similarly, also invest into service sector, ESG sector, and housing sector. Among the themes, housing theme, ESG theme, and service sector theme. If there are any Muslim friends of ours who want to invest in some Muslim funds, Nifty 500 Sharia or Nifty 50 Sharia funds is highly undervalued. There is a fund called Taurus Ethical Fund, Tata Ethical Fund. These are based on Sharia laws. Sharia laws are not bad laws. They exclude only 3 things. Interest-based banking sector. They exclude alcohol sector and tobacco sector. Rest all they invest into. So Sharia fund is also like ESG sector. They have got good correlation. Okay. So please don't invest into broad-based sectors at this point of mid cap and small caps. Invest into niche small cap quality, small cap momentum, small cap alpha, or invest into service sector theme, housing theme, and ESG theme. So as I mentioned here, what things? Okay, where do you get these charts from? So this site is called vsfintech.com. It's one of the sites that we developed at our research house. I am putting up a list here. Just go to this site, click on this page called Sector Basket. vsfintech.com, Sector Basket, you click and you can see this thing. Okay. So sorry. Sorry. I'm not sure if people can see it or not. I'll put in the send to chat, whatever. So this website, you can go and see. This is the only website in the whole country, my dear friends, which is giving you extensive study. Now your question is, okay, Satish, you told me that invest in private bank or else a FinServ bank. Which are the funds which are listed? What will I get if I invest into FinServ? This is what you may get for next 3 years if you invest in this sector. This is the risk you're looking at in this sector. Okay. So what are the funds listed in this sector? Nifty FinServ, you click here again. So you will get a list opening up here. These are the mutual funds which invest in financial services. Okay. So you can choose anyone with the highest score here. Composite index highest or anywhere between medium to highest. Any good big fund house like ICICI is good. Don't go into small fund houses like, I won't name them, but anything which is like recent or very new, don't go into those fund houses. Okay. Any big fund house is okay to go with. Okay. So you can choose this fund. And once you click on this plus, it creates a basket for you. You plus one more plus, it creates a basket for you. How much invest in each fund? You can see this is a percent allocation in this basket. Okay. So now the question of interest here is, what is the right proportion to invest into? So my dear friends, always remember the 4 rules. Right timing. This is the right time. Choose the right sector and right fund. Also make sure you make the right proportion of basket. Don't go out buying one fund, Satish told, go for small cap quality, go for housing thing. Don't go like that. Buy in a basket of 6 to 7 funds. I would show you a small example how the basket looks like. My dear friends, this, if you press this button called correlation, you can see our correlation matrix coming up here. Anything that's more than 0.90 is parallelly correlating. Don't buy both the funds in one basket. What does correlation mean is, if it is 1 and 0.96, that means if private bank goes up to 100 rupees, it will go up by 95 rupees. If this goes by 100 rupees, this also goes by 95 rupees. So they are parallel sectors. So please don't buy parallel sectors into the basket. Okay. So I'm going to delete this financial services because this is again conflicting with our correlation matrix. Okay. So now you can see all of them are green, 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 green. Here you can see Nifty small cap momentum quality, Nifty small cap 50 quality. Both are again highly correlated. So delete one of them. Whichever you don't like, whichever has got higher risk reward ratio, delete them. Nifty small cap. This has got higher risk ratio. So I'll delete this. And now you have got a beautiful matrix of basket of funds which you can invest into right now. Okay. So you can't invest in so many funds, no? So you can make it 7 funds. Now looking at all the highly expensive sectors, I will delete them and I will make a more decent basket. Okay. So housing also, ESG, so both are mean the same. Okay, fine. So this is something which is a reasonable basket to go with. Again, you can see ESG and service sector are highly correlated. We will keep one of them. You want to invest in? I would recommend invest in service sector and exports fund. So if you click on this service sector exports fund, you have only 2 or 3 funds right now. HSBC, exports opportunity, ICICI, export opportunity. So go with a bigger fund house. I won't name it, but as you can see, understand, you can choose one of the funds, right? And now you can see this is a beautiful basket of mutual funds. I'm going to invest into it. My dear friends, always remember, don't go randomly investing or don't go blindly investing. The basic level investing is, Satish, I don't understand all these sectoral and factor-based funds. I will only go with broad-based, market cap-based funds, large cap, mid cap, small cap, end of all talk. If you do that, your returns are going to be decent. Conservative investors who don't understand much of logic, they go with that logic. Invest in small cap fund, that's also okay at this point of time. But people who want to slightly advance ahead into investing, please go into sectoral factor-based investing. And my dear friends, this is the time to invest into factor-based investing. At regular times, they're usually very high, very expensive, very risky. Currently, they are very less risky and will be highly rewarding. So we have made a basket, which should be an appropriate basket for investing. And I will show you why we do that. Investing. I will share this basket report with all of you. I cannot name any specific funds, but these are the funds I'm investing right now in market. If aggressive, this is like this. If I am a balanced investor, it will be these funds. And if I am a very conservative investor, I'll be going with these funds. Dear friends, remember that at this point of time, I forgot telling you, there is one very niche domain called, can anybody ping me on the chat box? Are you able to see this basket composition?
Yes, sir.
Okay, fine. So there's a niche domain of fund called Matter, Nifty Matter Index. And that index is called Nifty Mahindra, Adani, Ambani, Tata, Reliance. And there's only one fund catering to this niche sector. I won't name the fund house or fund, but these are called Select Business Groups Index Fund. You can choose this. All these are available in direct and regular funds. You can take the this thing. But I am not here to recommend or propose one fund house or fund. I'm here to tell you what sectors to invest in at this point of time. Dear friends, other than these funds, kindly keep your 25-30% in gold and debt funds. If somebody wants to be very aggressive, silver gives you a very good investment option at this point of time. If you want to invest into silver at this point of time. Otherwise, put into debt and gold funds at this point of time. Okay. Why I'm telling you this is, at this point, although I'm saying that this is the best opportunity, go all out investing, I am still telling you that there is a 25% risk in the market. It may go the other way around. This may become worse from here. So for that 25% risk, you have to keep a cushion or shock absorber of 25% in these funds. This is one of the funds I'm investing in, where I've invested 50% into equities, 35% into debts, and some percent into gold. And these are the potential returns and possible downsides. And this is the correlation matrix. Nothing more than 1. All should be less than 0.80. And why we do like this? I will just give a small example. Why we invest like this? Our strategy is very simple. Look at this basket. It is investing in banking basket, tech fund, consumption fund. Dear friends, I forgot telling you, consumption is a very good sector to invest into. So financial services, tech sector, consumption sector going very good to invest into. Consumption, you have to invest with a pinch of salt, with a pinch of carefulness, because consumption is going to be booming for next 3 years. Government gave 12 lakhs. Thanks to our Sita Raman, who gave 12 lakhs in tax-free income, no? So the 2 lakhs now saved, extra money, where will they invest into? They are going to invest this into consumer goods. They are going to buy mobiles, laptops, burgers, McDonald's, pizzas, drinks. So all the consumption sector, textiles are going to boom for next 3 years. And they may fall also, 20% possibility. But when you are choosing consumption sector, it is a very defensive Rahul Dravid-like fund. So I'll give you a small example. How do we make a basket? This is my last 5 minutes and I'll wind up. Harish sir, I'm late by just 5 minutes. Please give 5 minutes.
Okay, sir.
So when you make a portfolio of funds, don't just buy large cap, mid cap, small cap, because all are parallel funds. If the market falls, all of them will fall. If market goes up, all of them goes up. I will today show you something, whatever happens in the market, it will not fall. It's just like making a team of IPL players. You have some batsmen, aggressive batsmen, who want to play like centuries for very long term. So they are our banking and tech sectors. Okay. You want somebody like Rahul Dravid, who will be our very wall-like stabilizers. And that's our consumption theme in this basket. You want somebody like Mahendra Singh Dhoni and Yuvraj Singh. Hitters, mauke pe chauka. Now the time is to invest. Go and invest in alpha and quality funds. And there are our Ishant Sharmas, who will be our defensive player. So when the pitch goes bad, all the batsmen will fall. But the bowlers will save our day. And those bowlers are our gold and debt funds. And in this case, our matter. Mahindra, Adani, Ambani, Tata and Reliance. So my dear friends, whenever you make a basket, always remember, you have to have very undervalued gems, who will be like our Sachins. Then you have to have our wall, who will be like our Dravid. Then you have to have our Mauke Pe Chauka, momentum people, Dhoni, who will be our momentum in capturing funds. And then you have to have our defenders, our bowlers, our Ishant Sharma, also possibly the new people. Where is that? Always remember, dear friends, your portfolio should look like this. Somebody who gives you very good profits, somebody who gives you reasonable profits, somebody who is like a hero or zero kind of stuff. So 20 by 0, and somebody who will save your day in a market, falling market. Your gold and the debt funds, all that. They will constantly give you 7%. What happens is, in a short run, you will have very minimal losses. And in a long run, they won't behave opposite. When I say opposite, I mean negative correlation. In a long run, they'll all be winners. As you know, Nifty 50 in 5 years, every sector has given profits. So all of them will look at 20% profits in long run. And in the short run, they will save your day from this Trump effect, tariff effect, this whatever nonsense is going on currently. Okay. So, dear friends, this is the art of creating a portfolio. Portfolio creation has to be a magic. It's not just so, dear friends, the conservative old timers will investors should go simple. Some flexi cap you buy, some large cap you buy, some small cap you buy, and that's the end of the talk. Okay. But slightly smart people, slightly aggressive people, they go with, at this point of time, I have mentioned some factors where to invest. I have mentioned some sectors where to invest, and I have mentioned some themes where to invest and what strategies to follow in that. So with this, my dear friends, I request you all to visit our website, vsfintech.com. I am thankful to all my colleagues who have already invested in these domains. I would like to tell the experience of portfolio management in terms of minimizing risk. So whenever you create a portfolio, remember friends, you have only 2 businesses to do. Minimize risk by investing in opposite classes. of mutual funds, not parallel classes. Okay. So this exercise we did last year because we knew last year was a very risky market. Our aim was not generate returns. Our aim was to minimize risk. And now maximize. Second logic is maximize returns. How do you do that? So in 2022, we identified MAFANG as the best sector to invest into. In 2024, we invested in banks, consumption, tech, and some factors, which all of which gave us a very decent risk minimization of 1 to 2%. When the markets crashed by 25-30%, we only got minus 2% losses. And in this boom return phase, the silver phase, the maximizing profit phase, we got close to 100%. I would ask my dear friend Pavan sir to share his experience in 2024 when he invested in June 2024 and how he saved his principal. And I would also ask Harish sir, can you please remember and recollect in 2023?
Yes, sir. We had invested in MAFANG. Was
Yeah.
a lump sum, and we got significant returns because of that.
Yeah. So, dear friends, whenever you invest, make sure you have only two objectives. In the turbulent market, minimize your risk. In the profitable market, make the highest profits. And my dear friends, this is the time to make profits. Invest your money, be slightly more aggressive, and go on investing into this. Now, I am thankful to everybody who gave the opportunity and patient listening. I would request any questions to come up open for thought. And our website, vsfintech.com, you can all go in there. I have put up some funds and for aggressive, balanced and regular investors. I would recommend not to just blindly follow into it. At every quarter, we'll give an update about which fund to take it out and which fund to invest into it. Please follow that. Without following a strategy for 5 years, investing in these baskets can land you up in big trouble. Don't blame me after that. So our website has got description of everything. What is a sector basket? What is how to go on investing in these turbulent markets? As you can see here, which themes to choose. Every sector which is undervalued, it has got a fund to it. And how to see that fund to the corresponding sector? You can look at this chart here. So first click on the, suppose I'll make it fresh for you from starting from scratch. I am 508 into time. Okay, I'll make it fresh for everybody. Supriya ma'am, I will refresh the page to request. So see, this is that page called sector basket. If you open this sector, this page called, okay, right sector, you can see which are undervalued, which are overvalued, all these things you can see here. But how to make a basket out of sectors, this is the page. So you have now decided that, okay, seeing this, I would like the opinion poll from other people. Tell me which sectors you want to invest into. I'll create a basket for you in front of you. The green ones are undervalued, red ones are highly momentum-based, rapid rising fund. So please, my dear friends, choose some green sectors from here. I will make a quick basket out of it. So let's say I will choose FinServ. You click it here. FinServ, and then take. Yeah, yes, ma'am, Mr. Puman, that's the one. And I will choose momentum-based fund here. And I will choose private bank. I will choose a very new fund called Nifty Top 10 Equal Weight Fund. Normally, large caps are expensive, but at this point of time, the large caps have become cheap and mid caps have become expensive. This is called mid cap to large cap ratio. Currently, large caps are dominated by mid caps. So you can invest in this large caps, and Nifty Top 10 Equal Weight and Nifty Top 20 Equal Weight is a very niche, unique fund. You can go into it. So Okay, somebody has mentioned Nifty 100, you have to add into it. Okay, Nifty 100 I added. And I added these green funds here. You can see these 5 green funds. So I want to now see which are the funds in this sector. Nifty FinServ, I clicked here, Nifty FinServ. And now you can see so many things here. You have some index here. I would just add some fund here. Let us say I added. Oops, sorry. I will take up ICICI Prudential Banking Financial Service Fund. Just for example, I'm not recommending ICICI Fund, but you can, just for example, you can take it. Okay. Similarly, you also mentioned something. Okay, before going to picking up funds, please check correlation matrix of these funds. There should be no positive correlation above 0.90. So you can see Nifty Private Bank and FinServ have got a very strong positive correlation. So you have to choose one fund out of it. So which sector you want to choose in out of this? Let us say we take FinServ. Both have got same returns, but FinServ have got higher risk. So let's delete FinServ. Okay. So now go back and check. Equal weight 100 have got almost high correlation here. You can see it here. This is 1 and red. So don't go with both of them. Let us say we deleted Nifty 100 from here. So this is a good basket to invest. 3 funds. Okay. You can add some more things here. You can add Nifty Tech here. You can add Nifty Housing, ESG here. And that will add up to some more thing. Okay. So we again click correlation here. So now you can see there are 5 sectors and there's a basket of 5 sectors which are not at all correlated with each other. If you have positive correlation, you're risking higher risk. If you have this green or orange things, you're having very minimal risk. So correlation metrics, we try to understand, are they moving parallelly or not? So if you have a less correlation, that's a great thing to do. So this is a good basket to invest in. And now you'll ask me, okay, Satish, we have made this basket. Tell me which funds to invest in. So click on Nifty 200 Momentum 30. You get some momentum-based funds. You choose one fund from here. And you take up Nifty 10 equal weight. And you choose fund from here. Okay. So similarly, you can keep creating your basket here. Okay, this is the basket. You can see it here. There's a small error here because the data is less than 1 year. You're getting 0 allocation. Don't follow this thing. This graph gives you good valuation only if the data is available for more than 3 years. These are very fairly new funds. That's why allocation is not correct here. Okay. So this is how you make a basket. And Nifty Tech, what funds are there in this? I will choose some fund called Technology Fund to invest in this. And that becomes one more basket for us. Yeah. So this is how you do it. So first go to, very simple, go to this sector basket page, pick up your green sectors, add them into a sector basket. Then make sure you check the correlation is not red, showing red anywhere. Except these middle ones, Nifty 200 or 200, 1, it's okay. Private bank, 1 is okay. Other things should not be red. It should be as less correlating as possible. Once your correlation is done, then start choosing your funds. These are the funds that you choose. And then you create a basket. Dear friends, at this point of time, do not bank on one stock, one fund, or one entity. Invest into the theme I told you. Don't forget this. Always build a portfolio, at least having 4 different types of funds. Undervalued fund, stable walls, aggressive momentums, and defenders. Your bowlers, gold, silver, and debt gives you very good value at this point of time. My dear friends, all the content I told today is all based on probability matrix of deep research of the past 120 years. And there is a probability attached to all the recommendations I told you. I told that bank is undervalued. It may be possible that it's not undervalued. But most of them hold 85% accuracy in our probability matrix. Don't take anything as a recommendation today. Just I have told you, how do we choose undervalued funds? how do you choose the right time, how do we make a portfolio, and how do we start allocating specific amount into each asset class. So right time, right sector, right fund, and right portfolio. All the four should match to make it a boom returns in the next 3 to 4 years. Thank you so very much. One question I wanted to ask, people have been constantly asking me, ETF or mutual funds. Okay, one question I've missed out telling you is whether to invest in stocks or funds. You can go with both. At this point of time, considering the risk reward ratio, at this point of time, stocks ka risk is close to 60% because only small caps and micro caps are left, which are very highly risky. And the potential returns you are looking at is 30% returns if you invest now. In mutual funds, you have, because it's a basket of 50 stocks, the risk comes down to 25%. You'll get to exposure to mid caps and large caps funds, and the returns are close to 25 to 30%. So you can choose it yourself. You want to go with stocks with higher risk and fair returns, or very low risk with very reasonable high returns. I would decide something like 75% for mutual funds and 25% for stocks. Please don't invest more than 25% of your assets into stocks, which are recently listed IPO, booming, people are talking crazy about, which are small cap, micro cap. Please don't invest too much money into it. I know people have got lots of money, tons of money. If you invest a lot of money in stocks, I'm telling you, my dear friends, कभी कभी हम लोग स्टॉक मार्केट को शॉक मार्केट भी बोलते हैं, and you may end up having a real good shock if you invest too much into stocks at this point of time. So I would recommend invest some 25-30% if you're very aggressive into stocks, but not more than that, and invest 75% in mutual funds, large and mid cap, for high returns. So the other question somebody has asked is ETF or index fund. Both mean the same. For people who are like simple investors, I invest in index funds or mutual funds rather than going for individual ETFs. So somebody has asked me that if I choose something, Makarand sir, very good question. Somebody asked me. So I will share my contact number. We will have a separate discussion at night if you want. Dr. Satish Vadapalli. Where I can talk to you in specific terms what funds and stocks to invest. But don't take any of these things as a recommendation. These are all only for this thing. Okay. So what happens if something starts as green and then turns red? So what do? This is a good question asked by Makarand sir. Please watch here. So this is a heat map of individual sectors. You can compare everything in one go here. Okay. As you can see here, I will choose one sector from here. Let us say I will choose something like, or let's say simple. We'll choose any good broad sector, large cap. Anything that becomes dark green here usually doesn't become red by 3 years or 4 years. This heat map is such beautifully made that it's not for 3-month or 6-month investing. It is for 3 to 5 year investing. Okay. So as you can see here, something which is red will not become again red for next 4 to 5 years. So anything that is dark green here will give you this is a silver opportunity in Nifty 50, 2016. So anything dark green will take time to go to light green, will take time to go to yellow, and then pink, and then dark red. A consistent dark red, you have to come out of the market. So I hope that answers the question. If something is dark green, it will stay for at least 2-3 years in dark green. Thank you so much for giving the opportunity. I would request Ajay sir to give our closing remarks. We have crossed 20 minutes beyond this thing. And if people are interested, they can continue discussing here.
Yeah, Dr. Satish, wonderful talk. As usual, you have done that
good research and presented in a various forms, sectors, themes, factors, mid cap, big cap, small cap, large caps, everything. For a conservative person, senior person like me, I have got only one advice to our listeners here who are also seniors and have got a risk profile which is in a conservative way, not the youngsters who are aggressive or those who can take risk. As usual, we know that mutual fund industry has become very complex. What Satish has given us is definitely a complex test of mutual funds because now the funds are more than the stocks. There are stocks are only 5,000 or 3,000 active stocks, but the mutual funds are 6,000 and 7,000.
Yes,
So it
sir.
becomes so difficult to select it, and that's how you need this type of research in it to pick up the right stocks at the right time, at the right place, at the right price. So those who have got a risk profile can follow this, not a recommendation, but can follow this sort of a strategy. But my always the what we have learned from various other sources, including WealthCon, is for doctors, you try to take a mutual fund which is direct, which is open-ended and which is a growth fund. Number one. Number two, you try to take index funds. Index funds definitely will not give 30%, 25% as we have just now seen, but it will give the index returns somewhere around 14 to 16%. And if you are a conservative person like me with a safety and the risk profile which is low, can go in for such index funds in a long run. So thank you very much, Satish, once again. And that was a wonderful session. Hope all of you put in a lot of questions in the group and we'll continue further. Thank you. I have to leave, so I am just closing and rushing. Thank you.
Ajay, sir, just my
Yeah.
last addition to your point. For conservative investors, currently Nifty 50 is undervalued, Nifty 100 is undervalued, and Nifty top 10 equal weight. This is a fantastic fund. The top 10 companies of the whole industry in equal weight fashion. Very conservative fund, currently at a high return point of time.
Well,
And other thing-
well. I have another point to add. The expense ratio in the index funds are less than the expense ratio going through your company or any other AMC will be definitely higher than what index funds will have. So we have to do consider over a period of 10 years or 20 years when you are investing there or 7 years. This particular thing becomes more and more when your corpus becomes 10 crores, 20 crores, 30 crores. So there 2.5% of 10 crores becomes 25 lakhs. So you have to think into these terms. If it says your nature is that I don't mind giving to some expert like Satish, but I do have to have a very comfortable life and a good returns probability of 85%, you can do that. That is my advice. Okay.
Thank you, sir.
Satish, bye. Thank you.
So thank you so much. Thank you so very much. So,
Sir,
that's-
Satish sir, only one thing, just make a video about your this portfolio making and selecting and post it in the group because
I'll
many
do that, sir.
people would read them. Thank you, sir. It was a wonderful talks. Thank you, sir.
Thank you so much, sir. Thank you so very much for giving the opportunity.
We will end this session, sir. Thank you, sir.
Thank you so much. Thank you so much, sir. I have mentioned my phone number in the group. You can contact me.